Look at the real estate board in the area you live in. Is home price skyrocketing unreasonably? Do you feel that no matter how hard you work, how strictly you save, the finish line of owning a home keeps moving further away? You are not alone. And more importantly, this is not a market coincidence. This is an organized attack. Welcome to the brutal reality of the economy of 2025. We are often taught that housing prices rise due to the law of supply and demand. Population grows, land does not increase, so prices must rise. That is the textbook explanation for naive people. We are talking about asset management giants like BlackRock, Vanguard, and State Street. For decades, the dream of the middle class was to own a suburban home with a garden and a white fence. That is how people accumulated wealth and passed it down to the next generation. But financial sharks have realized one thing. Why let people own assets when they can turn an entire generation into lifetime customers? Why sell a house outright and collect money only once when they can lease it and collect cash flow forever? Imagine a scenario. A peaceful neighborhood in Atlanta or Phoenix. A for sale sign is planted. A young couple hand in hand comes to see the house. They like it. They go home, calculate the mortgage loan, call the bank, and tremblingly make an offer. But they never have a chance. Because 15 minutes earlier, a representative of a Wall Street investment fund called the seller. They do not need a bank loan. They do not need a home inspection. They pay 100% in cash, and they pay 20% higher than the listed price. That house has disappeared from the market forever. It is no longer a place for a family to accumulate wealth. It has become a line on the balance sheet of an ETF fund. This is no longer a conspiracy theory. Data from Redfin shows that in the fourth quarter of 2021, institutional investors bought up to 18% of total homes sold in the United States. In some hot areas, this figure reached 30%. They are hoarding goods. They are turning the single-family homes market into a new type of financial asset. And BlackRock, the giant managing $10 trillion is becoming the face of this trend, even though they often stand behind subsidiaries and other private equity funds. Their goal is very clear: shift society from the Ownership Society model to the Usership Society model. The infamous slogan of the World Economic Forum, WEF, "You will own nothing and you will be happy," is gradually becoming reality. Only the happy part is not certain, but the own nothing part is happening right before your eyes. So, how do they do that? How can they manage thousands of houses scattered everywhere? And why is this strategy more dangerous than any real estate bubble in the past? We will dissect this house swallowing machine in the next part. If you think this war is fair, think again. When you go to buy a house, your weapon is a local broker agent and the Zillow website. Their weapon is supercomputers running artificial intelligence AI algorithms. They do not go to see each house like you. They scan data of the entire zip code. They analyze demographic trends, credit card data, and urban planning plans to know exactly which neighborhood is about to rise in price in the next 5 years. They target a specific segment: starter homes, the type of house with 3 bedrooms, 2 bathrooms, and moderate price. This is exactly the type of house that first-time homebuyers, young families like you, are desperately looking for. By hoarding all supply in this segment, they create artificial scarcity. When supply runs out, house prices are pushed to unimaginable levels. And when you cannot buy, what are you forced to do? You must rent. And who is the person renting to you? It is the investment fund that just snatched your dream house. But the real horror story lies in the financial engineering behind it. Why do these funds crave your rent money so much? The answer lies in a financial term that you need to etch into your mind: rental-backed securities. Remember the financial crisis of 2008. The cause was banks packaging junk mortgage loans into bonds to sell to investors. Now, Wall Street has created a new monster. They gather thousands of rental contracts together, package that monthly cash flow into bonds, and sell to pension funds, insurance companies, and global investors. What does this mean for you, the tenant? It means your landlord is no longer an individual who can negotiate. Your landlord is now a debt repayment obligation for a bond. To ensure yields for investors in New York or London, your rent must increase steadily every year. They cannot lower the rent because that would reduce the value of the bond. They have turned rent increases into a mandatory financial order. Furthermore, industrial scale allows them to ruthlessly optimize costs. A company like Invitation Homes, born from the Blackstone empire, owns about 80,000 houses. They have their own maintenance team, buy construction materials at wholesale prices, and manage everything with automated software. An individual landlord cannot compete on operating costs with them, and an individual homebuyer cannot compete on capital with them. Their borrowing interest rates are much lower than yours because they have access to cheap capital from the bond market. The result is a vicious cycle. They buy houses with cheap money. House prices increase, you cannot buy. You must rent. Increases their profit increases. They have more money to buy more houses. The dream of home ownership does not die because you are lazy or because you drink too much expensive coffee. It dies because you are bringing a knife to a gunfight with cannons. If you keep trying to chase the price race with these giants, you will be exhausted and bankrupt. So, where is the exit? If you cannot beat them in the buy-to-live game, can you beat them in the investment game? There is a way for you to stand on the side of the winner without having to become a ruthless person. In the next part, I will turn the tables. Instead of being a victim, I will show you how to turn this model into profit for yourself through smart financial tools and niche strategies. We need a frank conversation. It is time for you to kill your romantic ego. The dream of a home to live in with a white fence where you are stuck for life, paying off bank debt, might be the biggest financial trap in this era. Why? Because when you take out a mortgage to buy a house at a price inflated by investment funds, you are buying a liability, not an asset. You bear the debt, you pay interest, you pay property tax, and you bear the risk of price depreciation. Meanwhile, BlackRock and Wall Street funds are playing a different game, the cash flow game. So, what is your counterattack strategy? Do not try to buy the house they are buying. Buy the stock of the very company that owns those houses. The most powerful tool you need to know right now is REIT, standing for Real Estate Investment Trust. Think of it like this. Instead of putting down $500,000 to buy a house and chasing rent, fixing plumbing, or worrying about destructive tenants yourself, you put down $500 to buy shares of a REIT fund. Under United States law, REIT funds are required to share at least 90% of taxable income to shareholders in the form of dividends. This means when rent increases, cash flow flows into the pockets of BlackRock or Invitation Homes. A part of that cash flow also flows directly into your pocket. When you own a stock ticker, like Invitation Homes ticker symbol, INVH, or American Homes 4 rent ticker symbol, AMH, you are standing on the same side as the giant. They use algorithms and cheap capital to push rent up. Fine, your dividends will increase. They acquire more land. Your net worth increases. This is how you hedge against rising house prices. You may still have to rent, but your investment portfolio is profiting from that very rental market. More importantly, REIT has absolute liquidity. Selling a house takes 6 months, selling a REIT stock takes 1 second. But what if you still want to participate in physical real estate? Do not fight head on, attack the flank. The fatal weakness of large investment funds is scale. To manage hundreds of thousands of houses, they need uniformity. They buy identical matchbox houses in boring suburbs that are easy to manage in mass. They cannot do things that require meticulousness, uniqueness, or personalized experiences. That is your territory. Look for niches that BlackRock's algorithms ignore. It is the unique Airbnb experience model, a treehouse, a luxury glamping tent, or an artfully designed apartment in the city center. It is the co-living model for digital nomads where value lies not in square meters of floor, but in the connected community. Large funds are too bulky to operate such business models requiring a human touch. In this war, flexibility is your weapon. They have capital, but they are slow and bureaucratic. You have less capital, but you can create experiential real estate products that no algorithm can copy. But the story does not stop at investment. It is also about how you redefine your life. If homeownership is no longer the path to freedom, what does the new path look like? In the final part, I will map out the route for a generation of millionaire renters, those who do not own land but own true financial freedom. It is time we rewrite the definition of success. The old society tells you renting is throwing money out the window. They are wrong. They are giving advice based on an economy that no longer exists. In an era where BlackRock wants to own everything, the fact that you do not own the house you live in might be your biggest strategic advantage. Let's do a math problem on opportunity cost, the most important concept in investing. Suppose you have a down payment of $100,000. If you buy a house, that money will be buried in bricks and mortar. It becomes dead equity. It does not generate monthly cash flow for you unless you rent out a room. Worse, every month you have to pay additional loan interest, land tax insurance, and repair costs. The roof leaks. That is your problem. Property taxes increase. That is your problem. The market crashes. Your assets evaporate. Conversely, consider the mindset of the millionaire renter. They take that $100,000 and invest in a diverse portfolio, REITSS, and P500 fund certificates or startups. That capital generates compound interest immediately. Meanwhile, they rent a comfortable apartment. If a light bulb breaks, they call the landlord. If they receive a job offer with double the salary in Singapore or Berlin, they return the house and leave the very next month. This flexibility is an extremely valuable intangible asset in the 21st century. Do not let pride fool you. Owning a $1 million home, but having no cash in your pocket and carrying a 30-year debt on your shoulders is not wealth. That is sugar-coated financial slavery. True wealth is owning cash flow assets and having the freedom to choose where you live. Remember the barbell strategy we talked about. Do not leave yourself empty-handed before real estate inflation. Own real estate indirectly through the stock market so your money grows along with BlackRock's greed. But keep your personal life asset light. Let investment funds bear the risk of maintenance and natural disasters while you enjoy the freedom of liquid cash flow. The world is changing the rules of the game ruthlessly. Those who try to play by the old rules will find themselves stuck. They will work their whole lives just to pay interest to the bank and finally own a pile of obsolete bricks and mortar. Those who understand the new rules will surf these rough waves. They will not own the house to live in, but they will own shares of the companies that own the entire city. That is how you take back control. That is how you win the game that has been rigged.